Good afternoon, and welcome to the first webinar of 2023 in our Cancer Survivor to Financial Survivor series. Just a reminder to everyone that this webinar will be recorded, and after the webinar has finished, a recording will be sent to everyone to the email that you registered with. We are very pleased to be able to continue the series by being joined today by Andrew Tricomi. Andrew works as an independent financial advisor and broker affiliated with Canada Life. He has been working in this role for over 7 years now. His previous roles were held in customer service at a major Canadian bank and as an administrative assistant at the Financial Consumer Agency of Canada, which helps to educate Canadians with financial literacy and developing initiatives. His desire to help Canadians achieve prosperity, combined with the ability to develop strong relationships in what lead him to this role. His decision to work independently allows his practice to focus on the flexibility of investment or insurance product offerings to his clients, as well as providing a holistic financial planning approach. Andrew's educational background is in financial economics from Carleton University in Ottawa, which he graduated from back in 2015. He is also pursuing his Certified Financial Planner CFP designation in May of this year. Andrew has a very active life and enjoys playing sports, maintaining his fitness goals, traveling, volunteering in his community, and continues to further his education in personal finance. In today's webinar, Andrew will cover how your bank or financial institution can help and what questions to ask, how your financial advisor can help and the types of services that they may provide, the potential costs of what to expect, how your insurance agent can help you with gathering info and services they provide, RRSP and investments, and what to think about. And so with that, I would like to pass it over to Andrew.
Thank you so much, Lindsay. I appreciate this opportunity to be able to speak to individuals around these matters. I know there's certainly going to be a lot of questions after, so I'm hoping to go through all the slides and help answer some questions that individuals may have. So let me know as well if there's any connection issues on my end, or if I need to speak up a little bit. I just want to make sure that it's running smoothly. So let's get started here. So going on to the first slide, I'm going to, oh, here we go. So have you just been told that you have cancer, or have you beaten it? You probably have a lot of worries and concerns. It's important to know that you're not alone and help is always available. I just want to reiterate that the information shared here was prepared to help you better understand some concerns and questions individuals frequently have, and hope that you can gain the confidence in your financial planning and better focus your energies on your treatment and recovery. This information can vary based on province and jurisdiction, so keep in mind, I'm going to try to keep it very general. There are certain rules with, let's just say, government benefits and tax laws, as well as estate planning laws in each province that you're in. I am licensed in the province of Ontario, and that's where I do my business. So Ontario is a province I know best. I would say if you're in other provinces, it's best to reach out to a licensed financial advisor to get information on whatever it is you're looking for. As well, just to reiterate that, this is not any personal financial advice being given, as I don't know any of your personal situations. It's always best to confirm, again, with your advisor or a licensed representative what the best solutions and action items are for you to take. So let's move along here to the agenda. So as Lindsay pointed out, going through the 4 items we'll be discussing, how your bank or financial institution can help and what questions to ask, how your financial advisor can help and the types of services they provide, as well as some potential costs of what to expect, how your insurance agent can help you gather info and the services they provide, and RRSP's investments, what to think about. Now, some of these topics, I would say, are embedded in one another. So you'll notice, there's some questions or there's some answers to some of these topics in one another, because a lot of it kind of flows together. So it's going to be general in the sense where you'll be getting a lot of this information. You'll be hearing me talk about it more than once, but in a different context. So how your bank or financial institution can help. To name a few, your financial institution can help you with 1, helping you keep your affairs in order to keep you in line with your specific short-term and long-term goals. So it's always important to be open with your bank advisor or anyone of that matter. You're going to hear me say a lot about how it's important to be open with your accountant, your lawyer, and your family members too that are maybe helping you out during these difficult times, so that they can best understand your current financial situation and do their best to accommodate you with what they can offer. Sometimes banks have different rules or different, I would say, thresholds, depending on what you have with them. Certain products you're able to get at certain costs. So it's always good to be open about what it is that you're looking to achieve and what your goals are, and they can certainly try to help you out in their best interest, in your best interest, sorry. The second one here is access to specialized services in their branch. So for example, depending on, again, your situation and what assets you do have, you might actually get access to certain financial planners, such as a certified financial planner, which is a designation I'm going to be going for this May, which looks at holistic planning at the top level. Accounting or tax services, legal advice and documents, or even possibly some products such as emergency loans and relief funds, depending on your institution and the products available to you. So don't be shy to ask what other resources could be there. Again, depending on what you're looking to achieve and what your long-term goals are. A lot of branches do have access to certain specialists that can really tie in together what it is that you want to be achieving and how the best way possible to get to your goal. Financial institutions do carry a fiduciary responsibility to provide you with the appropriate advice and recommendations. So another important factor with being open and what to bring up with your bank as well is, again, a situation that you're in and the type of help that you need. It's always in your best interest and in their best interest too, to help you the best way possible. And again, they do carry that fiduciary duty, which means that they have to do what's always in your best interest and not theirs. But them stepping in at the right time and being able to see your financial situation a little more clearly can help you get guided a little more clear as well to success and to help you figure out what your end goal is. So another item to look at as well is financial assistance. So another area where banks and financial institutions can help out is helping you keep your financial affairs in order to your specific short-term and long-term goals. Dealing with finances can take up a lot of your time and energy. So focusing your recovery might be the #1 priority for you and your family, and maybe not spending so much time getting bogged down with all this administrative and financial work you have to be thinking about. So not having to multitask is quite common. That's why leaning on others for help can be important. So whether you have managed your money yourself in the past, or if you've always relied on people to do that for you, including important people in your life, bring them into the discussions as well, bring them into the meetings, have them also hear, what the advisor and what the plan is that you want to be able to achieve. So bringing along family or trust professionals to your financial institution to kind of have that boardroom meeting can be reassuring for you. And in fact, a lot of the times it isn't done. And then you start seeing some miscommunication happening along the way. If you have a lawyer that's trying to help you out with your estate plan, if you have an accountant that's trying to help you out with your taxes, and if you have your advisor trying to manage your investments in the best way possible, it's always good to have that communication between all parties. So then that way they work their hardest to provide the best service to you and everyone's kept in the loop. Your financial institution in most cases can allow you to and encourage to bring along your family and friends and other professionals in meetings. So this can be helpful. So as I just mentioned, keep everyone in the loop, and would also save yourself a lot of time and worry if you do keep good financial and medical records right from the start of treatment. So going on to the next one here, what to think about and how you can ensure you're in complete control of your situation and finances as well. So the first thing, how to stay in control. Start looking at what your legal documents are that you've put in place right now and what's going to be important to talk about down the road. So for example, power of attorney. Think about how you can ensure you are in complete control of your situation today. One way to do it will be to ask if you can add a power of attorney to your accounts at the bank. See what you can do for that. If you don't already have a power of attorney, ask and see what will be the best solution for you. This might help also in the long run if you're unable to make any financial decisions for yourself. So having a trusted person to step in at the right time to help you manage your finances in a responsible way, and also work alongside your financial institution and advisor if you are unable to. So the power of attorney, it's more of an administrative document to help you, take control of your finances when you're unable to. So that's going to give someone power to be able to make those financial decisions on your behalf. Again, if you are in medical treatment, or if you have a disability, you're unable to, or if you lose capacity in any way. One other thing to think about too with the power of attorney is the different kinds of power of attorneys there are. So again, I don't want to get too much into the legal side of that, but it's good to speak to a lawyer just to get some good advice on what could be best for you. But one other area of power of attorney you could look at is power of attorney for property. So let's say if you're traveling around a lot, or if you're not at home and you need someone to help manage some of your investments in other provinces or other areas, you can have a power of attorney for property appointed to, again, help you out with more on the administrative side. So going to number 2, it's credit ratings and reports. So another thing to look at as well is your credit rating can be important to know for any future loans or access to emergency funds or relief programs if there are any. So summarized documentation and up-to-date statements of all your investments, loans, and products, and the most recent values should be kept up to date. Also request frequent statements to be sent so you can keep that on record. That's also good for reporting practices as well, to make sure that you are reporting everything that you have. And again, keep it all in one place so that if you know you need to access it, or again, if someone who's your executor or lawyer needs to access these documents, they'll know exactly where to go for them. So the third thing to look at, I want to dig into more information, is what to ask your financial institution if you have a credit or some kind of loan. So what kind of interest rate are you paying is a good question to ask, because as you know right now, with interest rates going up and down a lot, well, mostly up now in the past couple months, it's important to know what it is that you're paying and what kind of product that you're in. There are some different loan or credit products that you are able to lock into a fixed rate, or you keep it variable, but get an idea for these changes that can happen that are unexpected, right? If interest rates are continuing to rise, you want to make sure that your plan is kept up to date, knowing that if inflation is a lot worse than expected, or if your interest payments are going to be more, that you have a plan in place to take care of that. And that's where it comes down to the financial planning aspect and getting an idea from your bank, what is the best solution for you to make sure that you're not going to be taking on too much credit or paying too much in interest, because again, that's another solution that can be fixed if the planning is done now. Another thing to look at and to ask is always ownership. So consider who is the owner of the account that you have, if it's a sole owner or if it's a joint owner. But also think about if there's a way you could add on joint ownership for anything, which could help out when it comes down to, who can make decisions if you're unable to, who else has access to these accounts that can kind of help you manage it. Or when it comes down to, if you passed away, the transfer of these accounts to the second owner can become a lot easier instead of it going through probate or something like that. So becoming or adding a joint owner on any product accounts you have could be something to look into. So your institution might be able to provide advice on this. This benefits you in terms of increasing your liquidity as well, if you're being added onto a joint owner for anything. And for estate planning, the transfer of ownership upon death to the secondary owner usually has those implications that it is technically easier to have that happen instead of being a sole owner, passing away, and then potentially this asset having to go through probate or other implications as well. So have this discussion with your institution, either your spouse, common law partner, or family member to see what you can kind of do to tie in these different pieces together. For the fifth item is ask also, what other accounts do you have access to that you can benefit from? So a lot of banks and institutions have their own unique product shelf and lists of different products that you can get access to. It's always important to know what those products are And products are always changing as well. I know the banks like to always change up what their offerings is sometimes, and making sure that they're also staying competitive as well with other banks and institutions. So getting up to date on what products and benefits are out there is always important. So every time you're in there, get an idea for, what is something that's applicable for you and what kind of products you can be looking at based on what your situation is. Number 6, who are your named beneficiaries and are they on all accounts? This is very important to have an idea of keeping track of what your beneficiary designations are, whether it's revocable or irrevocable. That's one thing we look at for life insurance, which we'll get into later in the presentation. But having up-to-date information on who your beneficiaries are and making sure that that is on your accounts is very important. As you know, that's something that can be easily forgotten, and it might cause some problems down the road if that change was never made. But always keep track of who those beneficiary designations are in your accounts, and always make sure that you have them listed down in physical form as well. What are the bank fees? I know a lot of individuals, like to talk about this as well, but it's important to know, what you're paying bank, and depending on the different products and services that you're getting, what the cost is going to be. Obviously, when you're putting together a financial plan, it's important to know what the cost is going to be for you and what the benefit is. But having an idea for what the bank or your institution could be charging you is important to also gather that information. Also for tax purposes too, depending what account you have, if it's like a non-registered investment account, most of the time there's a way that you can write off the advisor's fee from that for what you're paying. But again, that's better to ask your own specific financial advisor about. And again, depending on what account you have, that may or may not be doable. Number 8, is there a minimum balance required to hold certain accounts? So again, looking back at with banks too, and sometimes how they work, or any institution of that matter, holding on to different products or product lines that you have could require maybe minimum balances for that. So to make sure that you're always going to have access to, let's say, your line of credit, and this is just for an example, some banks might say, okay, you have to have a certain amount of usage of your line of credit to keep it open. It's always good to make sure that you can have access to these accounts whenever you need it, and if maybe there's a minimum balance required to even keep them and to hold on to them. This could be anything from checking, savings accounts, lines of credit, loans, or any investment products too. So what accounts are CDIC protected? So Canadian Deposit Insurance Corp is, basically it's a form of assurance for certain products that you have. Certain products are covered, like bank accounts, some term deposits are covered up to a certain amount and threshold, depending on what products you have. So if something ever happened, if there was a failure with the banks, or you weren't able to get your money, there could be something there for you. That's important to look into. You could always ask your institution about it, if they are CDIC protected and what the rules around that are. Another big thing too to consider about when you're speaking to your institution, or if you're looking to work with a new institution, are these 4 important factors. Customer service, as you know, right now could be a time where you feel getting the most out of service is really going to benefit you. So make sure that you have an idea for, what the implications are, what the customer service team looks like. If there's a designated person in the branch that you work with on a daily, weekly, or monthly basis, that you could get contact and access to them when needed. And again, what are some other offerings that they have around that? What does their customer service team look like? So as I mentioned just before, what does a team of individuals at the branch look like that are helping you out with your situation? What are their qualifications? What do they do exactly? Does one team member focus on one area and maybe one team member focuses on something else? But to have a list and to write down who the contact individuals are for the bank, that could be important for you, your power of attorney, your executor, and your family members as well, especially if they're all working together to help you out. And then what are some benefits you have access to? So another area too as well is what are some additional benefits this bank might be able to offer you on top of the services and products they're already providing. This could be above and beyond depending on the bank and depending on, I guess, the amount of assets or the type of business you have with them. There might be some additional benefits you do qualify there for, and it's always important to know. And then are you able to contact them immediately if there is an emergency? So what happens if maybe there's fraud on your credit card, or if you noticed something happened with one of your investment accounts that seemed unusual? Where are the, I should say, maybe potentially crisis lines that you can call and reach out to, just to make sure, again, that you are overlooking all the important factors of your accounts and to make sure that you could always oversee what's going on. So another thing to consider, and this is actually applicable to both financial advisor and the institution. So this next subject, I would say, it kind of intermingles between both. What you could ask your institution, your advisor, and also your legal and tax professional too can always play a role in some of these questions. But what are some benefits that you specifically can qualify for? Depending on where you're at right now and what your situation is, would you have access to EI sickness benefit? Would you be able to get, let's say, CPP disability? Do you qualify for the disability tax credit, which is important to know for certain products that you could then qualify for, such as the RRSP? And then also, what are the caregiver benefits like? So ask, what kind of cancer automatically qualifies for disability benefits, or what your health situation is and what would qualify for these disability benefits. And also, depending if you can qualify for the disability tax credit, which helps out a lot on the tax planning side. But also, like I mentioned too, opening up an RRSP, depending on your situation, most people get access to that, but it's always good to see what the qualifications are. And be aware too, if there are any clawbacks. Some of these benefits will have some clawbacks. It's either income or asset tested. So that's basically saying it's either income tested, such as clawbacks based on the amount of individual or family income you're bringing in, or asset tested based on the amount of assets that you have. So you might get a reduction of benefits based on personal or family net income. Looking through some other questions to ask your advisor or institution is along the tax side, right? So eligibility for, let's just say, the medical tax credit, which can allow you to receive a tax credit from medical equipment up to a certain amount. So that's definitely a good question to discuss with your tax professional and your financial advisor. Those are things that not everyone knows about. And it's important, as I mentioned before, about keeping good documentation and records. Make sure you're saving your receipts, for any healthcare services or products that you're buying for health-related issues. And make sure that, again, you're giving that information to your accountant, to your lawyer, or to your financial advisor, and it keeps them in the loop with your whole situation. You never know, you might be able to qualify for some of these benefits as well. Looking on to insurance. So again, another area too you want to look at, again, when dealing with your bank or financial advisor, is, and I don't mean insurance as in like life insurance and critical illness or disability, but let's say, if you have a loan or if you have a credit card, do you have insurance that can help protect you in case if you cannot pay it off? Some loans, some credit cards have, the ability for you to pay an extra cost to ensure that in case if you cannot pay it back, or again, if there's any other issues related to your loan and credit that you have. Travel insurance is big to look into as well, especially if you're traveling around the world. You want to make sure you're protected in case if anything happens. If there's any medication or medical treatment you need when you're away, that's also something to consider too. And then protecting your accounts also for financial relief and or medical bills. Credit counseling is an important area to think about too. Everyone's situation is different and unique. And some individuals, again, there might be more help and requirement needed to take you to your goals. One area that sometimes people don't look into, I find enough, is credit counseling. So having access to a trained counselor to help you manage debt and money problems. It's not, it's easier said than done, but it's certainly something that, depending on the jurisdiction and province you're in, this could also be a service provided for free, but that's something that you'll have to look into based on the rules of the province and territory that you belong to. So one area as well to look at on this side also when we're looking into speaking with your advisor or your financial professional is managing debt and also spending. So you have to ask yourself too, if you're unable to pay the bills, would you be best to file bankruptcy or file consumer proposal? I'm not saying that is something you should go to directly if you just can't pay the bills, but it's always good to have an idea of potentially what the worst case situation or scenario can be. So then if that situation does come up, you're not surprised by it. But those are two different scenarios, bankruptcy or a consumer proposal. It's always good to see, again, what could be the situation for you, and letting your institution advisor, legal and tax reps know exactly what you're going through can be helpful. So they could always help fight in your corner for your rights, as you know. So, what having been diagnosed with cancer create a setback for you where now you might need an additional relief from debt to help you, live the life you want to live. So there's always some things to think about on what you can do and help mitigate risks, but to have an idea for, if you are in that situation, to see what options are for you. Your financial institution can provide some additional support services as well, such as credit reports, like I was saying in the previous slides, relief, forgiveness, and also possibly some flexibility for certain products to help you pay off any loans. So it's going back to reiterate, asking for assistance, step-by-step information, where you can go for answers, how to apply for government programs could always be done first. And if any more deep conversation is needed with a lawyer or a tax professional, then you could always do that too. But asking as many questions as possible and getting an idea, from your institution on, what the process is always going to be important for you. So how your financial advisor can help and the types of services that they may provide, the types of or the potential costs of what to expect, and RRSP investments, what to think about. So one big question you might have for your financial advisor, if you don't have one or if you're looking for one now, is asking them, what qualifies you to provide advice? Whether you're looking for someone now or seeing if there might be someone better suited for you and your goals, always asking them what their qualifications are is important, and what kind of continuing of education are they doing as well. So advisors also often have different areas of expertise, so it's also very important to see what expertise is best for you and your family. Second question is, what is your approach and what services does it include? So discussing the advisor's investment style is also important to have conversation with. So does their style line up with how you want your money to be invested? Also ask them about the other services they offer. So many now offer comprehensive estate planning, succession plans for business owners, and more. So another important discussion is around availability. You might want someone to keep these conversations going after the initial meeting. For example, if advisor is flexible to do video conference calls or in person, it's always good to see what's best lined up for your situation. And question 3, what am I paying for? I guess it goes back to the original slide where we talked about what the fees are. So of all questions to ask your advisor, this is often the most eagerly anticipated. So we all know that advice isn't free, but you do deserve a frank and open discussion about fees before agreeing to hire them. It is important to understand what you're paying for and what the benefits could be for you. Number 4, what should my goals be and how can you help me achieve them? So the first place to start is to set some goals. Who adds that working with an advisor is about more than saving for retirement? Your goals now might include cash flow management, prepare for any unexpected costs, estate planning to ensure that, if death were to happen, how is your estate going to be properly dealt with? Is there going to be a big tax liability at death? Maybe you want to set aside some money for your children or grandchildren, or maybe you want to make the most out of the next couple of years and rather spend your money now instead of leaving it all for inheritances. So your advisor should help you define your goals and help you reach a plan. How will we measure success? So this, can go in different ways. It's a point to determine what success really is for you and make sure that your advisor is aware of that. A win is not necessarily measured by a portfolio beating its benchmark. It could be taking that extra vacation, buying the cottage, paying down some debts, or just seeing your assets increase. What's more important, though, is working with an advisor that you can emotionally and socially connect with. An advisor can be like a mentor, an influential figure, or a coach to you. They're there to help you during the tough times, the anxious times, to make sure that you are seeing life and that the road lies clear ahead. It's more than just a transaction-based business. It's also a personal relationship that the closer you are with your advisor, the better the experience is, especially during the tough times. And just to reiterate, in the beginning of the slide when I was saying to be open and to have open conversations with, all your different parties, whether it's your tax consultant, your legal representative, your financial advisor, your family members. It's always important for individuals to stay in the loop and to really understand, what you're going through and the best ways to help, bring you to success, depending on what your success is. Number 6. So, actually going back, another thing I wanted to mention too for number 5, how will we measure success? Questions to ask your advisor during your annual review. So write down a list of questions that you want to be asking your advisor. Make sure, again, you have those written down. You keep good record keeping of what was discussed during those meetings. And once you've actually selected your ideal financial advisor, you should be meeting up with them at least once a year, if not every quarter, to go over the past 12 months and look ahead for the new year. It's important that constant follow-up and communication is to be had in case if an unexpected life event happens, that your advisor is kept up to date with what your goals are, what your financial situation still is, where your accounts are, and what they can do to help prepare you in advance for success. Number 6, portfolio and net worth projections. So how you judge your investment performance will depend on expectations you do set with your advisor. If you told them that you have a high risk tolerance and you want to maximize growth, then your portfolio's performance should reflect that under ideal circumstances. So you probably should not expect growth during tough economic times. Instead, you should expect more volatility, but that's where it comes down to always making sure that your risk level is aligned with your objectives. So doing a risk assessment, every year or so could be important for you, so that you're going through those same questions that you were asked maybe 5 years ago when your situation was different. Now that your situation has changed, maybe your risk level has changed. So it's always good to keep up to date on how your assets and your investments are allocated, what the potential downfall can be, what the previous returns have been, just to get an idea of what you can expect in the future, and make sure that your risk is always aligned with where you want to be today, tomorrow, and in the future. It's also important for you to know where your net worth sits and how it compares to last year in relation to any changes that have happened in your lifestyle. Number 7, financial planning reports. See your future. So some advisors like to use tools such as financial planning software to project your financial outcomes from any life changes that have happened and how it will affect you. So this is good to talk about so that you can be better prepared for what lies ahead. Don't just be focused on transactions or investing. If you have any expected expenses or even a reduction with income, how can you assure yourself what needs to be done? There might be some tweaking needed in your financial recommendations or even your portfolio. So it's important, obviously, to make sure that you are not just being shown where you sit today, but more importantly, where you sit tomorrow, next year, 5 years from now, 15, 20 plus, and so on. So have them run stress tests too. The more prepared you are, the better. When I say stress tests, I mean if your advisor is using financial planning software, again, to kind of paint the picture for you of what your situation is. Some financial planning softwares allow you to add in scenarios such as, what if we expect inflation to be higher? What if one of the clients passes away sooner? What if rate of returns on your investments is not as predicted? So have them look into that as well, and at least that way you can see, depending on any unexpected circumstances that happen, where your plan is at, and if there's any tweaks or any changes needed to be done. And again, it goes back into saying, at least you're educating yourself on this now, you're getting a good handle and grip of things now, so that depending what does happen that is uncontrollable, you're able to obviously feel good about knowing if your plan can still handle it during the tough times, you know it's going to handle it during the good times. So what are some stress tests to run, and make sure your advisor can learn for these? I guess I spoke too soon, but this was already on the next slide. But as I said, what happened if you had died unexpectedly? How would that affect your plan today? How would it affect your spouse or potential partner, or partner if you have one, your kids, your family, your tax situation? There's a lot of things to think about with that. And that's where it comes down to, like I said, involving also maybe a legal representative, and they can help you plan for that. Another thing too, what happens if you die and if you have not named an executor for your state? So what's the implication with that? Depending what jurisdiction and province you're in, there could be certain rules for, if the courts are going to appoint an executor for you, or if they're going to shake the family tree and see who can step in and do it. But it's always good to know that. There are paid executors that do this for a living, so there is usually a fee to that. But again, if you feel like you can't name anyone that you know or trust, you could always, reach out to a professional executor, and they might be able to help you out with your situation. And the other question too there is, how are my beneficiaries laid out? So make sure that you have the right beneficiaries named. Depending on the account that you have, and depending if you have a beneficiary that's considered like a preferred beneficiary, a common law partner, a spouse, a dependent child, or someone with a disability, do you have the ability to roll over certain accounts right into their own specific RSP? Or if you have a disabled child, if you have passed away, are you able to maybe roll your RRSPs into their RDSP? So these are all things to think about and to get an idea of. And that is also where, making financial planning modeling and looking at some projections can be useful. You can get a good idea for where you stand today and where your plan will take you in the future. So another thing to consider too is, did you know your executor can be personally liable for any unpaid taxes from your state to the government, or if mistakes were made? So it's important to make sure that the person you name is willing to take it on as the role of your executor. Your other option could be to seek out a professional, like I said. And one concern individuals have is tension amongst family members on who is inheriting what. So having an open conversation with your beneficiaries, your kids, family members is important to know, so that there is not any surprises. Some other questions to look at here, and this all comes down to, again, some stress tests you can look at doing with your advisor or even on your own basis. As I mentioned before too, what if inflation is higher than expected? That's something that you don't really hope to have happen, but it's always good to know, if your spending has to increase, at least to cover what your base expenses are. How much flexibility do you have with that? And what does that mean for my medical expenses? Let's say if costs did go up. Obviously, there are some good government benefits you can get based on some medical expenses, but there might be some out-of-pocket expenses that you still have to pay for. And getting an idea and getting a nice budget done for yourself is important. You can lay out what those expenses are and how you can make sure that you can pay for them. And then, do any federal or provincial grants from the government, are they indexed to inflation benefits? So make sure if you are qualified for any government and provincial grants, just ensure that this is a grant that is indexed. Most are, but it's always good just to confirm that anyways. And then, how fast can my savings erode due to inflation? So that's another important item to think about, and maybe brings up a conversation around saving more towards an emergency fund, right? Money set aside for unexpected events that happen. Ask your advisor to help you understand what your fixed expenses are. So maybe split up your expenses between discretionary and non-discretionary, what you absolutely need to be paying for, and what expenses don't necessarily need to happen, but can still happen based on the flexibility that you have and the type of lifestyle you want to live. But that's always important to see too. Some other strategies we look at as well is possibly pensionizing some of your assets to avoid uncertainty and to reduce risk. So if you are really worried about inflation, or if your investments you feel like may not be able to keep up with the required rate of return that you need, instead of investing in the stock markets, obviously there are some risk adverse investments such as annuities, GICs, high interest savings accounts. And as you do know, with interest rates being higher, some of those products have become a little bit more favorable. But again, it's always important to look at what the product is and what kind of situation you have that could be best beneficial for you. Another thing could be also if you're looking to spread out your income for longer or to help guarantee a higher amount of income, is consider delaying CPP and OAS. So with that, you could increase your benefit if your income needs now are manageable, but the future is more unknown. So that's another thing to talk about. So adding in a bit more context. So just like the questions you can ask your financial institution, legal, and tax team in the previous slides, you can most certainly ask your financial advisor too. The government provides tremendous support for Canadians with disabilities, low income, and health matters. Here are some important facts to note also when going over financial planning with your advisor in more detail. First question is, what benefits can I qualify for based on my health or living situation? As we discussed in a previous slide, the disability tax credit. So that is a non-refundable tax credit that can help people with impairments or their supporting family members reduce the amount of income tax they may have to pay. An RDSP, so that's a savings plan intended to help parents and others save for long-term financial security of a person who is eligible to receive the disability tax credit. And you don't necessarily have to be a parent. You can get it for yourself too if you do qualify for the DTC. And also the medical tax credit. I know I mentioned this a couple times, but it's very important to note how the medical tax credit works in Canada. It's also a non-refundable tax credit that you can use to reduce the taxes you have to pay or will pay. So the disability tax credit, I'm just going to go into some more detail. If you have a severe and prolonged impairment, you may apply for the credit. If you are approved, you may claim the credit at tax time. By reducing the amount of income tax you may have to pay, the disability tax credit aims to offset some of the extra costs related to the impairment. And let me go into a little bit more detail on the RDSP. So contributions to an RDSP are not tax deductible like an RRSP is. And this can be made until at the end of the year in which the beneficiary turns 59. Contributions that are withdrawn are not included as income to the beneficiary when paid out of an RDSP. However, the Canada Disability Savings Grant, the Canada Disability Savings Bond, investment income earned in the plan, and the proceeds from the rollovers are included in the beneficiary's income for tax purposes when paid out of an RDSP. And the medical tax credit, if you paid for healthcare expenses, you may be able to claim them as eligible medical expenses on your tax return. Medical expenses for taxpayer, the taxpayer's spouse or common law partner, and dependent child under the age of 18 are claimed on line 33099 of the federal tax return. That's if you're trying to look for it. So only expenses in excess of lesser of 2,421 for 2021 or 2,479 for 2022 or 3% of line 23,600 net income can be claimed for the federal tax credit. One thing to think about too is, due to the way the credit is calculated, a couple will usually get a higher credit by combining the medical expenses of both spouses on one return. The one with the lowest net income, unless the income is so low that there will be no tax to offset the credit. So this can get a little complicated. It's just good to know that there are some benefits there for you with that. But like I said, depending on your situation and what you have, it's always good to speak to your advisor. They could definitely break that down for you and get a sense for maybe some eligible medical expenses you've taken on can qualify for this. So another thing to think about is the age credit. So the age amount is a non-refundable tax credit that is available to those over the age of 65. It is non-refundable because they cannot make your income tax go below zero. It will not create a refund. CPP disability. So the Canada Pension Plan Disability Benefit is a monthly payment you can get if you're under the age of 65, have made enough contributions into CPP, have a mental or physical disability that regularly stops you from doing any type of sustainable, gainful work. And the Guaranteed Income Supplement is a non-taxable monthly payment provided to low-income old age security pensioners. Just like the OAS, the GIS benefits are not tied to employment, so you can still collect them if you're still working or have never been employed. Spousal allowance. So the allowance is a non-taxable payment, so you can get if you're age 60 to 64 and you've lived in Canada, or you live in Canada and your common law spouse partner is eligible to receive the GIS. Your combined annual income is less than the max annual income threshold for the allowance. And the allowance for survivors. So the allowance for the survivor is a monthly payment you can get if you are between the ages of 60 to 64, you live in Canada and your common law spouse or partner has died, and since their death, you have not remarried or become a common law partner to another person, your annual income is less than the maximum annual income threshold for the allowance for the survivor. So another thing to point to is that workers receive EI benefit only if they have paid premiums in the past year and meet qualifying and entitled conditions. Self-employed workers may participate in EI and receive special benefits too. Another item to think about, this is another thing that some individuals overlook, is the pension credit. So taxpayers receiving certain pension income may claim both a federal and provincial territorial pension income tax credit. This is also non-refundable credit, but it can be transferred to a spouse or common law partner if it is not fully used by the taxpayer. Any unused portions cannot be carried forward or back. So a tax tip here, transfer any unused portions of your pension income tax credit to your spouse. And one other item too to consider with that is the parts where we talk about, actually, go to the next slide. There we go. So EI continued. So with EI as well, there's 3 different parts to it. So you have a regular benefit, a sickness benefit, and a caregiver benefit. So the regular benefit for the employment insurance provides regular benefits to individuals who lose their job through no fault of their own. For example, due to shortage of work or seasonal or mass layoffs, and are available for and able to work but can't find a job. Always apply for EI benefits as soon as you stop working. You can apply for benefits even if you haven't yet received your record of employment. EI sickness benefit can provide you with financial assistance if you can't work for medical reasons. So you could receive up to 55% of your earnings, up to a maximum of $650 a week. The number of weeks of benefits you could receive depend on the date of the claim begins. So before December 18th, this was last year, 2022, up to 15 weeks. Another thing to consider as well for the EI sickness, there are some regions, and depending on the province you're in, the price could also change. So it's also considered to know that depending where you live, your jurisdiction, your territory, that you do speak to your advisor to figure out what the right amounts are for you and what you can qualify for. Another thing to look at as well is the EI caregiver benefits, which we'll go over in the next slide here. So the 3 types of caregiver benefits is the family caregiver benefit for children. So the maximum weeks payable up to 35 weeks, and it's who you're providing care to, so a critically ill or injured person under 18. The family caregiver benefit for adults, that also is paid up to 15 weeks, and it's for a critically ill or injured person 18 or over. And then the compassionate care benefit, which is up to 26 weeks, and that's a person of any age who requires end-of-life care. So that was actually all of part 7, which is asking your advisor, what kind of benefits you can qualify for. Clearly, there's a lot, right? There's a lot to know. There's a lot to get a sense of. It's always important you educate yourself on that too. So then you could also go into the meeting with your advisor, knowing this information. When they explain it, it's not like you've never heard it before. You can familiarize yourself with everything. So another question to ask your advisor, are all my goals still on track? So this is where you get to test the value of the financial plan your advisor put together for you. You would expect to see consistent progress towards all of your goals. If this is not the case, your advisor should not only be able to explain why, but also have a plan in place to get you back on track. Ask your advisor if you can still retire on time, or if your setbacks have an impact on your goals with the amount of income you expect to need to maintain your preferred retirement lifestyle. This is a chief concern for individuals, and your advisor should be confident in being able to help you reach them. They should also be able to tell you how much you currently have saved for retirement, how much you're on course to save by the time you stop working, and how long that money will last. And regardless if you're in retirement or not, even if you are in retirement right now, it's a similar situation where you're looking at the review and you're basically seeing what the retirement is going to look like for you even 5 years into retirement, or 10 years, or 15 years. So one thing to consider too is if you are falling short of income in any way, it's always important to know that there are plans in place that should be put in case if that happens. And that's where it comes down to doing budgets, doing cash flow statements, and kind of see where you're at today and what you can do to help make up for any of those shortfalls. So another question to ask is, do I need to make any changes to my plan? So when you ask this question, your advisor should in turn ask you if there have been any major changes in your life, such as getting married, having a baby, switching jobs, or any sickness or medical event that has set you back. If you're earning considerably more or less money, then not only your plan, but also your goals may need to be modified. So keep that in mind too. A lot of the times, as much as you want to be hitting all the goals that you have set, you want to make sure what is achievable based on what you know you can be doing confidently. Another thing to consider with that is if you have new financial goals. Let's say you're saving for a big expense, or if there's something down the road that you're kind of earmarking, you're going to need to spend money on this. Or has there been a global change in stock markets? Now is the time to bring those considerations into your financial plan and to incorporate it. And then number 10 is my plan making the most of tax strategies. So when it comes to most important questions to ask your advisor, this is one that some individuals forget, even though it can be the most crucial. A thorough plan will incorporate every aspect of your finances, and each aspect should be set up as tax efficiently as possible. Now is the time to go over those tax strategies with your advisor and what they have put in place and how well you guys worked on it together. This should always be considered. Another thing to always look at doing too is to always file any receipts you have, as I mentioned before, making sure that you might be able to make claims on any of these specific products or services you've acquired due to certain health concerns, conditions, or events that have happened. And then what should I concentrate on in the coming year? So your annual review conversation should prompt ideas and direction that may be different from last year. Your financial advisor may be able to set new goals for you in this way. So along with ways to achieve them and any tax strategies that could be helpful, you should leave your annual review with a clear path and action plan for the upcoming 12 months. So going on to the other topic here, how your insurance agent can help gather info for you and services they provide. So it's always important to have good record keeping habits. As discussed, all your investment insurance statements should be accessible to any beneficiaries and or powers of attorney and executors. Staying up to date and informed about your insurance is just as important as the other finances that you're staying up to date on. Your insurance advisor is responsible to meet your needs as well, offering financial guidance and advice, financial analysis, create and explain customized plans, and assessing your portfolio and analyzing your risk. So also be open and honest with your insurance advisor, as this can translate to proper planning and ultimately the results you'd be hoping to achieve. Your life insurance agent or company will probably ask you some questions about your health, family, finances, if you are looking to get insurance. Tell the agent what you need and what you can afford. Be honest in your answers, and any personal information you provide is confidential. So they need this information to really understand how much it will cost to pay off your debts, including your mortgage, and how much your dependents will need to maintain their lifestyle without your financial support. And by understanding the risk associated with insuring you, the agent will be able to help you form a needs assessment. And also note that misleading or erroneous information can invalidate your policy. Make sure you understand how they produced your assessment. What are some types of insurance policies you might own that you want to make sure you're keeping up to date and on track with? Is life insurance policies, disability policies, critical illness, and health and dental. There might be policies out there that you bought many years ago, you forgot about, you've just been paying for it. But again, it always comes down to good record keeping and seeing again what the outcome of death or disability could be financially for you and your loved ones. What are some questions to ask your insurance advisor? What exactly are the policies I have? Who are the owners, joint if any, on the policies, and who are listed as beneficiaries, including revocable and non-revocable? Are there any riders on this policy, such as waiver of premium upon disability? So some policies, they can give you the benefit of putting the premium on pause if you were to get disabled, can't work, and can't pay for the premium. Are there any exclusions on the policy? So will a policy not pay out under certain circumstances of death? So that's also important to know if you've had any exclusions on your policy and what that entails. What is the guaranteed amount in the policy and what is not, including premiums and benefits? So again, if you own potentially a permanent whole life or par policy, it's important to know if you're getting, or if you've been given a projection of what the policy is going to be worth in the future. It's important to know that there could be some guaranteed and non-guaranteed values in there. And in the non-guaranteed value column, those are projected amounts. So it's always important to know where your policy stands and what is the guaranteed portion, as that might be the better number to use for planning. Are any benefits from the policy subject to income tax? So obviously with life insurance policies, typically those pay out tax-free. But keep in mind, if you do have any cash value or any access to money in the policy, that could trigger taxable income for you if you were to withdraw that out throughout your lifetime. Then another thing to know is there a cash surrender value that can be accessed now? So as I just mentioned, some policies have a buildup of cash in them that you might be able to access. And it's very important to know what that is, as again, that could relate towards your whole financial plan, living or non-living. So keeping in mind too, going over some information here and some insurance concepts, what is a beneficiary? So when you purchase a life insurance policy, you can name a beneficiary. It's a person or persons who will receive the death benefit from your policy when you die. When you name a beneficiary, the money does not go to your state, it goes directly to your beneficiary instead. And it's also important to know, again, who you've named, and you are able to name more than one person too. Who can be a beneficiary? Well, it can be your spouse, children, dependents, another family member, friend, or charity as a beneficiary. That's who you can name. If you name more than one beneficiary, the insurance company will divide the death benefit between them based on the allocations that you had put. Can I name my underage children as beneficiaries? Under most circumstances, children under 18 cannot receive control over any money left to them in an insurance policy. And under most circumstances, like I said, if you want the children to receive the money, you should name a trustee or administrator and set up a trust for the children. So speaking to a tax and estate lawyer and accountant would be advisable. It is important to choose a responsible trustee who you can trust. So the trustee is responsible for keeping careful records of all dealings with the money, investing the money as required by court-approved management plan, passing the accounts before the courts on a fixed schedule, and transferring all the money to the children at age 18. So when you die, the trustee or administrator will hold the death benefit in trust for the person until they are 18, at which point the money will be paid out to the child. For those in Ontario, if you die without naming a trustee or administrator, the death benefit and any earned interest will be held in trust by the province of Ontario and will be paid out when the child reaches legal age. Refer to your rep in your province to see if this would apply for you. And the last slide I have here is actually some notable resources and sites worth visiting. So a couple of these sites will be good to take a look at. Tax Tips has some great information there to learn more about what tax benefits you could apply for, some tax planning strategies as well to see what kind of tax bracket you might be in based on your income. The top one there, Get Smarter About Money. So it can also be used by individuals outside of Ontario because they do have a resource page where you can download a really nice goals sheet. It's an Excel document. You could write down all your goals, help keep track of them. There's a budget template on there. There's RRSP, TFSA basics, so information to know about that. But there are specific Ontario-only questions and answers on there. But some of it too is based for anyone all around Canada. And then another website is the Financial Consumer Agency. So I used to work there too a couple of years ago, or more than a couple of years ago, 2015. But even now, it's still the same initiative. You know, their main concern is helping out individuals with financial literacy, but they're also a resource to go to if you feel you're being doing, if there are any complaints to be made about your financial institution. You can make those complaints to them, they'll help you out. And then obviously the last two as well, depending, you know, what license your advisor holds, if it's an MFDA, so if they're mutual fund registered, and if you are on mutual funds, it's good to know some information about the regulations around that by visiting mfda.ca. And then the last item there is the insurance regulatory body for Canada to get some information on, again, rules and regulations around insurance that you may own. And that would conclude the presentation. I'm happy to go through some questions if anyone has any.
Well, thank you, Andrew. Yes, if anybody has any questions, you can either add them to the questions or to the chat. So we'll give just a few minutes to let any of those come in. I did have one question, Andrew, for you. What
Sure.
would you say would be your top 3 recommendations for someone who is looking for compatibility with their financial advisor?
Yeah, I would say someone who you feel you can always trust and have an open conversation with. And again, it comes down to if you've been working with this advisor for a long time already or not. If it's your first time meeting them, I would say really right off the bat, the first meeting you have with them, you know, the type of image that they give, they should explain to you clearly, you know, what their area of work is, the type of experience they have. Maybe they have a special niche or focus in certain areas, helping out certain individuals. So I would say really to pair up that relationship is to see, you know, if their experience with work has really, you feel will benefit you based on what your situation is. And again, it's having that instinctual moment where you feel, okay, this is someone I think I can slowly start working more with together. And depending on those slow, you know, meetings you start having with them, you start building up trust, how fast you can kind of move along into developing a game plan with them. Because at the end of the day, you want to make sure this is someone you could work with long term.
Perfect. All right. Well, I don't see any questions or anything, so I guess you were very thorough, and so that's great. So I want to thank you, Andrew, for your presentation, and we look forward to having you come back and join us for
Yeah,
our next webinar with your follow-up presentation on budgeting for a new normal.
yeah.
If everybody else wants to keep up to date with our Cancer Survivor to Financial Survivor series, you should sign up for our newsletter to receive notice of all upcoming topics. And also don't forget that all our webinars are posted on YouTube and our Facebook page. And I want to thank everyone who was able to join us today. We look forward to sharing more valuable information with you through this series. And I'd like to wish everyone a great rest of their day. Thank you.
Thank you.